Welcome to Dental Unscripted. Where Mike Dinzio and Paula Quinn break down the practice ownership journey, one episode at a time. Starting up, buying, and running a successful dental practice.
All right, guys. Welcome back to another episode, Dental Unscripted. You guys know who I am, Michael Dinzio, one of the crazy people that run this show. And we've got some really fun folks on here. If you guys have not been paying attention, I've got a new co-host, and her name's Paula Quinn. Hey, Paula, what's up?
Hey.
So Paula helps me run, and what's that?
So I'm just knocking things over.
Oh boy, she's out of control again, folks. I don't know. But no, Paula Quinn is on, and now we are tandem this program and tandem here and having fun doing it. And then we also have Michael Clark, who is one of our newest coaches on the team. Michael Clark, an executive coach based out of Seattle, Washington. Hey, Michael, what's going on, brother?
How you doing, Michael? I'm doing well. Hi, Paula.
Hi.
We had Michael join us today because of his unique background, but today is kind of all things kind of patient finance, patient acceptance, trying to get the most out of every opportunity that comes through the practice. And the last time I had an episode on this topic was in 2020. I looked it up, and it was with Care Credit, Michael Clark's former employee, hence why he's on the show today. Employer, sorry. And yeah, it was a good conversation. I thought we should bring it back up. And but before we do, a little housekeeping. So if you guys are paying attention, Dental Unscripted is a new brand, a new program for us. We're trying to get everybody consolidated to this. If you follow us on Startup Unscripted and you're listening to Startup Unscripted, guys, this channel is gonna not be long. It's gonna be a no more soon. So please get over to Dental Unscripted and subscribe to that one, because we're still going to have startup topics for you on Dental Unscripted. Same with Acquisition Unscripted. Same thing. If you're listening on that channel, get over to Dental Unscripted. It's just simply Dental Unscripted. It's navy blue, turquoise with a big tooth. So that's that. And then, as you guys can see behind me, if you're hanging out on YouTube and participating online through all of our socials, you will see behind me, I've got all this gear behind me. And today we are proudly sponsoring or being sponsored by Candid Pro. So before we get started, I just wanted to give you a quick shout out on that announcement. If you guys aren't aware, Candid Pro is a clear aligner system built for general dentists. That's what I said. General dentist. And it's kind of a cool program. We actually had an episode like 2 or 3 episodes back, so you should definitely check that one out. But they've designed this program specifically for general dentists, and you'll understand why once you watch that episode. But their whole thing is about driving predictable outcomes with more work efficiency, so more efficient process around that. And ultimately that's supposed to drive more profit. So, and it does, I think it does. And so if you check out the link below in the description and all that good stuff, you'll see a link, and they're giving you guys a really incredible deal just by listening to the program. So click on that link, get a demo, figure it out. I think you'll like it. And yeah, we'll go from there. So let's jump right into it. Paula and Michael, all things patient finance and getting patients to say yes to treatment. This is a simple question, Michael. I'm gonna tee it up to you, my friend. Why even have patient financing? Why is that a thing? Why should it be a thing? Why do I always see it on the counter, but yet nobody uses it? It has a bunch of dust all over it. But why? Why use patient financing? What's your take?
You're not wrong, Michael. Years ago, when I had my own consulting business in Phoenix, one of the things that I ran into all the time was the fact that almost every office had a massive unscheduled treatment list, just massive. So if they were producing $1 million and collecting $1 million, They had 1.2 to 1.5 million in outstanding treatment. So what's happening is by not giving the patient options that work for them,
Mhm.
patients are just opting to say no, or I'll schedule later.
Yeah.
Right. And unfortunately too, what a lot of doctors don't consider is that the treatments they're saying no to are typically the more expensive treatments.
Yeah.
So
What's bigger treatment plan?
well,
What do you think a big quote unquote? God,
well,
to the average patient, right? What's big?
what's big? Well, big is subjective, right? To one patient, big might be having to do a crown instead of a 3-surface filling, right?
Mhm.
It might be
Mhm.
a dental implant. It might be like a clear aligner case. In some, doctors are starting to do all in 4 cases. Those can be what, 25, 30 grand an arch.
Mhm.
So big is relative.
Right. Right. I mean, when you ran your practice, Paula, did you offer patient financing? I think you did.
I did.
And did you offer it to everyone or just to the quote unquote big? What did you, I guess every demographic's different. Your demographic in the city, big was probably $1,000.
Yeah, absolutely. Um, I was probably a little guilty, as Michael Clark's going to uncover today, of picking and choosing. It's hard. Some companies are different than others. When the ones that require you to have a promotion and you're hit with the bigger financing, and we can bust through those myths today with Michael Clark, but there's other options out there where you don't have to do that, and you can pass that more on to the patient. And that's probably a little bit more comfortable for an owner, to know that they might only be paying 3% interest instead of 15% interest.
Yeah.
So we should probably talk about that a little bit more. So yes, I offered financing. Was I guilty of picking and choosing? Absolutely.
Yeah.
And
Well, I think that's a perfect segue to kind of like statistics around, if I spelled that right, statistics around payment methods. I hope I didn't.
You did.
Every time I do that, like someone chats, like you just butchered that. I'm like, well, okay.
Just abbreviate stats when you don't.
Stats. Let's do some stats. I love stats, and I'm a numbers guy, and I think numbers. I think numbers speak. I will transition this to Michael, but I will say the last time that Paul and I coached a client, I'll never forget. It was a $1.67 million practice, and we did a care credit analysis on how many times they did. Forget care credit. They're not sponsoring us today. Candid is sponsoring us today, but it was care credit, and they did like this analysis, and they used it like one time in 12 months. And I was like, a $1.6 million practice offered it one stinking time.
Before you get into the statistics, the thing that I hear, because I do case acceptance, patient enrollment
Yes.
all the time, what I always hear is the team thinks they know what's holding the patient back.
Yeah.
They don't know. They'll make up something. No, they don't want that. They don't need that. They just need time to think, or it's you just don't know. So what I learned, through Michael Clark before he coached with us, is you should just always lead with it. You pretty much should always lead with your options, but he's a little bit more of an expert on that. So I'll let him talk about that. And if you want to go straight into stats, we can right now. But I think it's important for teams to know that no one's following up on that 1.5 million unscheduled treatment. And so
and the ones that are right, I sorry to interrupt, but the ones that are, I used to ask them, because they would have a team member have to sit on the phone and start calling all these people, right?
That's fun.
And that's fun, right? So I would ask them, like, okay, out of 100 calls, how many people actually schedule?
or even answer these
or
days.
even answer. Right. And the most common response I got was, out of 100 phone calls that they had to make that they didn't really want to make, maybe 3 people would schedule.
Yeah.
Maybe
Wow.
3.
They need Paula.
They need
But
Paula.
they do need Paula, but that's terrible. Exactly. Well, so statistically speaking, we can easily say that this service is underutilized. And to Paula's point, it's probably very subjective. There's probably some limiting beliefs behind the front office people with their financial situation, right? And
Yes.
so they're not doing that. But from a statistic you were sharing before the program, please share. When a patient comes in, how do they pay? What you were just sharing that. Please share with the
Yeah.
audience.
Yeah, the revenue stream for a practice. Historically, about 50% of the revenue coming in is coming from insurance. It makes sense, right? Crown's 1,200, they cover half. Patient's got to pay the other half.
Yes.
35% typically is coming from your traditional payment methods. So Visa, MasterCard, Discover, cash, check, whatever. But every office,
which is why merchant services is so
there you go.
important, and we can help that.
Absolutely.
Anyways,
Got that's a good plug there. But every office, and what's interesting is it doesn't matter if you're in Beverly Hills or if you're in Ajo, Arizona, or wherever you are. It's 15 to 20% of your patients are just not prepared for the cost of dentistry. They're just not. Their credit cards
15 to 20%.
15 to 20%. So if you have 2,000 patients, right, that adds up.
Yeah.
You know.
So 100 patients walk through our practice today. 20 of them had no idea how they were going to pay for whatever you just dropped on them.
Right. Two out of 10 people coming into your practice today are not prepared to pay. Period. Okay.
Wow.
And that's why, again, you go back to what I said earlier about, if they're doing, like your practice example, doing 1.6, their unscheduled is probably 2.4. Guessing.
I don't know.
Yeah, because high case acceptance is 40, 41, 40, low 40s. Medium is in the mid 30s. And, so if they're getting even 35% case acceptance.
You just reminded me of something. Years ago, I heard a statistic that the case acceptance rate for crowns in this country was around 42. But this was years ago. Okay, this is I think it was an ADA statistic. I was working with a large DSO client a couple of years ago and speaking with their CFO, and we got to talking about this. And I said, just out of curiosity, what is, because he's a numbers guy, I'm like, what is the case acceptance rate for your group? And he said, it's abysmal. He says it's 28%.
That's bad. And just so everybody's just so everybody is on point, for all of the doctors that are driving to work right now and thinking 40% is not high. We're talking about dollars accepted, not people. So if 10 people walk in your practice, you might get 8 of them to say yes. That's not 80% case acceptance. If those 10 people each had $1,000 case, then what we're talking about is dollars accepted. So the 8 people may have said yes, but only 4,000 of the 10,000 was accepted. So again, dollars accepted is the actual case acceptance that us consultants talk about. So anybody can get $100 out of someone, but it's a little harder to get 1,000, 2,000, 10,000 out of somebody. So
yeah, I think the stat is like if it's the size of a car payment or smaller, they're more likely to say yes today, right?
Yeah.
So and you're not wrong. It's yes, patients are scheduling, but I'm a patient that needs 2 crowns and 2 fillings, and I'm scheduling the fillings because my insurance will pay for it. I'm not scheduling the crowns yet.
Yeah. Well, let's get to kind of like what option. I think there's a lot of options. Like why? I don't know. How about this one? Why don't practices take advantage of this? I guess we kind of covered that already, but like, I guess it's the belief we covered on that. The belief Why else? And Paula, you own practice. What?
I'm gonna Paula speak to it.
Why do you think? Is it all down to the belief, them assuming that they know better, or just talking about money is icky, or what?
I think it's just habit too. It's forgetting about it. It's not being fully educated in it, and you don't want to feel stupid. They think it's time consuming, so it's more on their plate to have to help a patient fill out an application, or I don't know. Mike, you went around. What were the objectives, or what did you see? I mean,
Yeah, it was to Mike's earlier point too. It was very common for them to say, "Well, I present it all the time."
yes.
I present it all the time.
Really? Do you
How
know?
do you present it? When is it presented? Do you wait until the patient is squirming in the chair because they've got a $5,000 treatment plan in front of them, and the insurance is only going to pay $1,500 of it? When do you bring it up? So I think really there's a lot of reasons why they don't take advantage. Number one, the staff is not comfortable with talking about money, essentially. Okay. Two, doctors or owners don't necessarily like financing because Paula made the point earlier. In their mind, they're thinking that they're paying 15% interest by offering. Okay. And it's what they're missing out on is it's not interest, it's just a merchant fee. It's no different than your Visa or MasterCards. Okay. Most of these lenders are going to deposit the entire treatment amount minus the merchant fee, and that's it. Okay. So they think that if the merchant fee is 15%, mathematically, they're thinking, well, wait a minute, my profit margin for my practice, my overhead's 75. So I'm only making 25. And if I do financing, now they're going to take 15 of that. And that's not really how it works. Not really how it works at all. Another reason too, especially like when you have like a legacy office manager that's been with the doc forever.
I like how he said that, legacy office manager.
Legacy office manager,
AKA Greta.
Greta. No offense to any Gretas out there.
I know. Yeah, my grandma was a Greta. So
yeah,
Ethel. No, Ethel. I was gonna say Ethel.
Wait, her name's Greta or Ethel? You don't know?
It's Ethel.
Man,
I didn't mess that up. I always talk to my clients about the Ethel Greta.
Well, you did mess it up when you said
Lisa.
my grandma's name.
Okay. I just hope you don't get hate mail from all the Ethels and Gretas.
I know they're not listening to the program. But if you're an Ethel dentist, I'm sorry.
Back to the legacy office manager. They've known the doctor for so long and they've been in the practice for so long that they don't offer it because they think they're saving the doctor money.
Yes.
Not offering it.
And what do they usually offer instead, Michael Clark? Do you know?
Well,
I know where she's going with this.
A lot of times they will offer an in-house payment option.
There you go.
Right? Because number one, they don't have to worry about a rejection, the patient not getting approved. Number two, they can at least get the patient on the schedule, right? And the patient only maybe has to pay a couple of $100 down, and they think that, we'll just collect it over the next 2 or 3 months. What they don't understand is that statistically, if that outstanding balance goes on any longer than 120 days, the probability of actually collecting it drops to near zero. Near zero.
Well, I like that you said that.
I mean, sorry. Go ahead, Michael.
No, I was just saying, of course, dentists and business owners think that they'll be better banks than the bankers and other people offering payment plans is in every consultant's vocabulary coaching tool bag. We all say, do not do it. Why? Because of what you just said, it doesn't get collected. And then there's the management of staying on top of it and tracking it and getting Greta to follow up with those payments. And it's a bad idea. It's just a bad idea. Is that where you were going with that, Paula? I interrupted you.
Yeah, no. That was it. It's the managerial fee of the front office now tracking this payment down. It's the risk of not getting the payment. And I say to my team members, how about we forfeit your payroll for 120 days till I get that money collected for, to pay you with that if you're going to make those kind of decisions. All the time, doctors are doing in-house payment plans, and It makes the this is way off the subject, but on the subject. I say this every day. We're the only industry that allows somebody to take a product home and not pay in full or finance. Why
Right.
not finance? They finance their cell phone. They finance a mattress. They finance everything. I showed you that thing the other day, Michael, that I did with the hygienist. 1.2 to 2 bill or 1.5 to $2 billion every day on plastic surgery, just like a nose job alone. It's like a $30 billion industry, and people have no problems financing it. But
Absolutely.
heaven forbid the gateway to their body, they just like go to hell in a handbasket.
Well,
Right.
I mean, the statistics are that the average adult has less than $2,000 in their savings account right now. Like that statistic has gotten worse and worse and worse over the years.
Yeah.
And so payments matter. So not all three of the panelists today aren't disagreeing that payments matter. That's what gets people to say yes. That's the way the millennials and zennials and so on and so forth. That's the way they think. Even the older folks, my mom, she's on a fixed income. She's got her money coming every month. She wants a payment plan. Payment plans matter. It's what gets people to the finish line, but doing it in-house, not the way to go.
Right. So Michael Clark, why do they matter?
Two points there. 2 points. And I'm going to give a shout out to the wonderful
The world.
one of the dental speakers that I used to follow. She actually started off as an office manager with her husband, and then started looking at the business of dentistry, discovered some really interesting stuff, eventually wrote a book, and then she became a consultant, and now she is a traveling famous speaker. And I'm speaking, of course, about the lovely Kathy Jameson. And Kathy Jameson studied what the cost of managing in-house is. And her conclusion after reviewing multiple practices was that it's 42 cents on the dollar is what it costs to manage with the postage, the staff time. It's 42 cents on the dollar. So to your point about why do payments matter, I'm going to tell you a brief story real quick. So one of my former colleagues,
Story time.
One of my former colleagues was looking to do Invisalign because she was an ortho relapse case. She had some shifting. She wanted to, make her teeth pretty again, and so she knew that she was probably going to be an express case, so it wasn't going to cost her maybe as much, right?
This was before Candid, of course. Before let's say a clear liner company of the other.
Candid would have been more affordable.
Yeah, Candid would have been way more affordable, and she wouldn't have even needed payment plans. But go ahead. Sorry, Michael. Go ahead.
Absolutely. So she reached out to her dentist first, obviously, and asked him. She said, "Hey, if I'm, what do you charge for an express case?" And they told her it'll be about 3,600. And so she said, "Okay, I'll think about it." And she went home and thought about it, and then thought, well, maybe I'll get a second opinion. So she called another office that wasn't too far away and said, "Hey, I've already been checked. I know I'm an express case. What does that run if I do it through you?" And they told her, "Oh, we've got some great payment options. In fact, we can start treatment on you with no money down and payments as low as whatever it was, $150, right?"
Done.
Who did she book with?
Of course,
she booked the payment option. And what's really interesting is she didn't know until well after the fact that by the time she paid it off, she actually paid more for the second option.
Yeah. Of course.
So the office technically collected more revenue as well.
So the moral of the story is ABCs. Always be selling. Always. No, I'm joking. No, kind of not. It's all in presentation and verbal skills. I loved that. That's a great story, and it absolutely matters. We also do membership plans, help people with membership plans, and we had our other partner, Dental Menu, on the program. Check that episode out. Same thing. Patients want payment plans, and they need them, and they're budgeting, and it matters. So, okay, cool. Anything else on that topic? Go ahead.
Yeah, I mean, I think the other question I would have is, you're saying why financing, right? I think Michael Clark, if you can hit on level of care, that would be, and we're
100
talking to a bunch of dentists here.
Right, 100%. So,
Oh, we care about that? No, I'm joking. I'm joking. Go ahead.
yeah, hope you don't
100%.
get hate mail on that too. Yeah, no, level of care as well. You know, offering a way to pay over time can mean the difference between somebody doing like a PFM in the
Mhm.
interior, versus doing a fully, like zirconia, something really beautiful. It can make the difference between a denture patient getting like the absolute baseline plastic looking dentures versus getting something that makes them feel good about themselves because it looks real, right?
Yeah.
Yeah, and it's the difference between, like you said, doing the couple fillings versus doing the entire treatment plan. Going ahead
Mhm.
and do everything that's planned out for that year, as opposed
Absolutely.
to phasing it out over a 5-year plan.
Yeah, actually we've been tracking same day treatment percentage. I believe has been going down the last 2 years on average. Which is an interesting fact. And maybe Paula can fact check me with dental intel. I don't know.
Mhm.
But I believe the last time I looked at it, same day treatment acceptance percentage has gone down, and maybe this idea of patient financing is a way to help you do that more often.
Well, and I'll tell you this much: both of my children needed ortho, uh, 2 stages of ortho when they were very young, and of course, the orthodontist offered the in-house, payment option thing too. But because the time was shorter, I was almost forced to have to decide which child I loved more, because it was too full,
Was it the
too
first
convenient.
one?
Yeah, that was the first round, right? But there was a financing option that I could spread it out over a longer period,
Mm-hmm.
and it essentially allowed me to do both children simultaneously for about the same monthly payment I would have paid for one child
Mm-hmm.
through the in-house.
Nice.
Well, I guess like last little bit on this, unless we really have a burning desire to touch on other things, but I'm curious what the group thinks. I've never sold the stuff. I've never really looked into it. There's a lot of options. We keep saying Care Credit just because they're the lion's share, but there are some others that are really doing well out there. And we've partnered with a few of them over the years. But like, what are some of the things that differentiate these companies, and who are they? I mean, I guess we don't even have to get into that, and there's no way we know everything about all of them.
Sure.
But any ideas there from the team on other options, other things other than Care Credit, or what's the downside of Care Credit? Let's have a discussion about that.
Well, there are a lot more options these days. Care Credit has been around the longest. They're still hugely popular because the utility of being able to use the card over and over and over again through the years. Um, the challenges might be because it's a revolving line of credit, the underwriting standards are going to be a little bit tighter than if it was an installment loan, for example. And so what you're seeing right now is a big surge in fintech and martech companies, basically breaking into dentistry, breaking into healthcare, and trying to provide lending solutions for the patients that are more palatable.
Mm-hmm.
So, for example, like a true no interest product where there is no interest for the first 6 months, 12 months, or 2 years. And then if the patient doesn't pay it off, instead of being hit with the retroactive interest of, say, a deferred interest plan, the patient would only pay interest on the remaining balance to the end of the loan. Okay. So that's more popular for some people. But yeah, it's just there's a lot out there. There's a lot popping up all the time. Just comes down to what are the fees, what's the approval rate, and what's the conversion rate? Are the products that are being offered palatable enough to patients that they want to say yes today?
Mm-hmm.
Right?
Well, Paula's always talked about in offices, teeing you up here, Paula, a little bit, so get ready, on delivering treatment 100% with that option on the treatment plan, There's no subjectiveness. There's no limiting belief. Have you seen that before? Or is that what you suggest, Paula, when you're delivering treatment plan, is like you've got all these options and one of those right there on 100% of the treatments is right there? Have you seen that?
Not sure what I understand what you're asking.
Well, just delivering it to the patient, and just having that as an option 100% of the time on the
Oh yeah,
treatment plan.
I think that every time you deliver a treatment plan, you've got to have multiple options. And I think it's, cash, maybe a cash discount, credit card, or third-party financing. I think you let the patient decide. I think that if you provide it all, I always say patients are 50% less likely to schedule treatment once they've left the practice. Somebody's got to hunt them down. Somebody's got to get that emotion back in them of just finding out they have a mouthful of decay or periodontal disease. It's hard to get that back after they've left and had bought a new cell phone, needed new tires, whatever it is. So if whatever we need to do to enroll that patient that day into scheduling treatment is the best option, or else you've just paid your team countless hours to hunt somebody down. You're less likely to even get them to schedule. Probably not. Even if they schedule, it's probably not going to be committed. So we kind of have to get them while the emotions are raw. And the best way to do that is give them all the options and let them choose. It's, again, you asked and Michael Clark kind of answered, why Care Credit above anyone else? It's a household name. They work in vet, eye, cosmetics. Most people that are going to not choose another one is because they've already have Care Credit and they don't want their credit checked again and like another, form of that credit out there. So that's why Care Credit, in my opinion. I have nothing against Care Credit. I think they're amazing. I do not always like to push the promotion period on those smaller payments. So I wanted other options. If they say, can I use this? Absolutely. I'm not going to fight somebody. I'm not going to turn down treatment because I might get penalized with a little bit higher interest, but I'm going to lead with something else, but a third party option. But I always want to be with Care Credit because it is, honestly, I couldn't even tell you, it's a household name with so many different fields of medical out there that it would be silly not to have them. I do think their onboarding training is great. They require that you take these courses, which is annoying, but at least they set you up for success. And then they come in and check on you. They make sure that you understand you're utilizing the financing. They try to meet with you and encourage more usage. Of course they do, but it does set the front office team up a little bit more for success.
But you are suggesting multiple, not just Care Credit.
No, I'm not even sorry, Care Credit. I'm not even saying.
What do you mean? They didn't pay.
No, I know. I'm not even saying suggest them. I'm saying have it because you have to sign up with them. You have to have a direct deposit. You have to go through the training. I'm saying have them as an option. You might not lead with it, but you want it there in case someone whips it out and says, can I pay with this?
Yeah,
I'm saying lead with multiple options, and it's third-party financing, whatever you choose, obviously Care Credit and a cash discount. Those would always be, and which works better for you would be, how I would say it. But I'm going to lead with all three. Whatever venue you choose for your financing is up to you. I just don't think you should be afraid of offering it.
No. And you're right. 100%. The strength of Care Credit is their network. Really. It's the reuse that keeps coming back. Right. But for new patients, there may be some other options. There's two great up and coming lenders that I've been introduced to that I've been talking to recently. So you got Covered Care and you got Clarity Pay, and they've got some exciting things that are different than what has traditionally been offered in the space. But the one thing I did want to also kind of point out or cover with this is that another side effect of the patient leaving without scheduling, unfortunately, I believe it was a path to purchase study that was done a few years back with dental patients. Okay. and I may be misquoting, so don't send me hate mail if I'm misquoting this, but it was somewhere in the neighborhood of 25 to 30, 25, maybe 27%, close to 30% of the patients that walked out without scheduling ended up getting the treatment done at a different office.
That's interesting. Yeah, that's too bad. It's such a simple thing. I also, while you guys were talking, I was thinking about like extra large things, specifically like clear aligners. There's other groups and fintech companies and other competitors that kind of have that niche of bigger stuff, 5,000 or bigger, or and there's just different things to consider. So I just think that like you can't just go, ooh, care credit. Like, I think you guys brought up a really good points on why one of the options should be care credit, but I don't think care credit's pulled on every opportunity. I think if it's clear aligners, it might be someone else. If it's if you already know that someone's going to have a less of credit score, maybe you bring out another option, but it's having that options for patients to say yes and deliver the care. That's what I heard. Any last minute kind of things on this topic, and hopefully the three of us move the needle to our audience, because I just don't think we're doing this. We're not, as an industry, we're just not doing this, and we should be.
I would say all of our startups that I work with, I tell them to pick two and have them available. And like you said, maybe one's based on lower interest, one's based on easier, more widespread access due to credit scores. I think you've got to do some interviewing. There's so many out there. I can't be super knowledgeable on all of them anymore, but I think you've got to interview and sort of pick two different options that will cover a wider range of patients that you feel comfortable with. Because I'd rather if you're not going to use care credit, don't go with them. Although I think it's a miss because, like I said, it's a household name having it there. But I think you've got to be comfortable because you want your team to lead with that as well. It's got to be something that you can, be comfortable offering, because you're having a big miss. Like Michael Clark said earlier, that, if you're 1.2, 1.5, whatever, you probably have two and over millions of dollars of unscheduled treatment. And unfortunately, you can't tell me those, if we did it right the first time, that we couldn't get a larger volume of that coming out there.
And to that, go ahead, Mike, real quick.
I was just going to say, and don't get something just to get it. Like, oh, I got to do it because everybody. Do your research, understand the service, educate your team, and be a loan broker to your patients. Understand why you would offer this one versus this one. And if your front office needs to know, and maybe you can create an incentive around it, but whatever. I mean, but the tools that you have, like, own it, but don't just get it just to get it. You gotta be a solution maker, not a box checker. Go ahead, Michael. Last comment.
No, your comment was so brilliant that I completely
done. I just blew your mind.
Blew my mind.
I mean, yes, go.
Go ahead. Go ahead.
No, that's it.
We're wrapping it up. You forget.
No. Oh, no, you go. Oh, no. Oh, you go.
No, you go. No, go.
No,
it's done.
That concludes the program.
Wait, you just thought of it. You forgot it again.
No, it bubbled up for a second, but then it went away again. And it's that's what happens when you reach this chronologic section of life. So
yeah.
We should have financed that brilliant idea. Dang it. All right, you two, it's a pleasure, and I hope our audience got out of it just another reminder. Check out Candid. We love them. We think they're great. Check out the description below. Again, 30% off. They have a great starter package. If you want any help on practice management, case acceptance, just helping set up your practice from scratch, like Paula said, even buying a practice, don't just inherit what they all did. Look at all the contracts you have, and utilize, figure out what you're trying to do, and see what works best for you. So without further ado, Paula, thanks as always. Michael, great guest today and great knowledge. Thank you for everything.
All right.
Happy to be here.
Have a good evening.
Yes, you too, guys. Bye-bye.
Bye-bye.
Thanks for listening. Let us know how you like the show. Rate us on Apple and Spotify. Subscribe and follow for more.